Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
So welcome to the new series of podcasts by Vox Markets. And within this series, we intend to hear from industry leaders who are going to educate the market on their specialist sector. We'll be providing in-depth conversations using experts on their chosen topic, and the podcast series will allow the opportunity for listeners to submit their own questions, which will be asked throughout the interviews. So today on the podcast, we have James Campbell, and he's the Managing Director of Botswana Diamonds. And he's here today on the podcast to talk to us about the diamond industry, especially in Botswana. So welcome to the podcast, James.
Thank you very much indeed, Will, for having me.
It's okay, not a problem. James, do you mind just by starting by telling us a little bit about your background and the experience that you've got within the diamond industry?
Yes, Will. I graduated from Imperial College here in London in 1985 in mining and exploration geology. And I've been in mining and exploration geology of diamonds ever since. I was very fortunate to be over 21 years at De Beers, where I received considerable technological know-how in the exploration, evaluation, and mining of diamonds. I was also very privileged to be Nicky Oppenheimer's first personal assistant. Subsequent to that, I've run 4 listed diamond companies, 3 on the AIM market and 1 on the TSX market. And I'm very pleased to be running Botswana Diamonds PLC with my old chairman, Dr. John Teeling.
And that's on the AIM stock market now, and you're also listed on the Botswana stock market.
We are listed on both stock markets, and we feel that's equally important to be on both.
And how are you finding the Botswana stock market?
The Botswana stock market was excellent when we were running African Diamonds together, where we had a very advanced project. But as at the moment we have chiefly exploration projects, most of our funding and most of our liquidity comes out of London.
Look, I don't know an awful lot about diamond production. I know that diamonds are made out of carbon, but how do you really talk to me about how you get a diamond? How does diamond get formed in the ground? How does that work?
Diamonds are a high pressure, high temperature mineral, and they're formed deep in the Earth's crust and in the upper mantle of the Earth under very high pressure and very high temperature conditions. And the transporting agent to bring those diamonds to the surface are called kimberlites. Kimberlites are basically volcanoes. None are erupting at the moment, but what we are mining diamonds from at the moment are extinct volcanoes made up of kimberlite. Kimberlite comes from the word Kimberley, Kimberley being the town in South Africa where kimberlite was actually first mined and where Cecil John Rhodes and Barney Bonato built the De Beers operation. Interestingly, around kimberlite, if you look at modern day eruptions such as Mount Vesuvius, Krakatoa, Mauna Loa, a kimberlite eruption would have been significantly more explosive, as the magma, when it comes up from deep within the crust, comes up very, very fast and would have generated massive clouds of kimberlitic dust over the environment. So essentially, kimberlite is a transport agent to bring the diamonds deep from within the crust up to the surface.
So you really need a location where you have volcanoes in and around the area, is that right?
Sort of, yes. But different types of volcano erupt in different parts of the world in relation to the plate tectonics or the tectonic plates. Where you typically find diamonds are on what they call cratons. And cratons are very, very old, ancient parts of the world itself and are in fairly unique locations. For example, Southern Africa, Central Africa, the Northwest Territories and the Shield areas in Canada, Northeast Russia, bits of India and bits of Australia. But essentially they're very, very old pieces of earth which are a long way away from the plate boundaries.
So would you say that it's quite a relatively easy process to understand the location of where a diamond field may be?
Generally, it is a fairly easy to understand where the cratons happen to be. There are obviously some debate about the kind of craton boundaries, but what is more difficult is actually to find the kimberlite within those cratons. Because if I look at the Campbell craton in particular, which straddles Botswana, South Africa, Zimbabwe, Lesotho, and Swaziland, it is host to many hundreds of kimberlites. But to try and find a kimberlite is difficult, but even more difficult is to try and find one which is commercial.
Okay, so you find your kimberlite, you know where your diamonds are. How do you go about, you briefly mentioned it, but go into a little bit more detail, how do you go about extracting that diamond? Maybe, I guess in the early days, they must have been hand mined, maybe, were they?
Yes, they were. If you actually look at the very early days of Kimberley, they did mine it using pick and shovel and windlass and things like that. And then they used a process called flooring, which is a very, very simple process in itself, in which they excavated the kimberlite and laid it out on large floors, no more than maybe 30 centimeters thick, and let the rain and the difference in temperatures gradually erode the kimberlite, which is full of clay minerals, into dust. And once they did that, they then washed that kimberlite to actually recover the diamonds.
Okay, and today, what process do they use now?
On a production process, use one of two techniques. The first technique is a process called crushing. You crush, you then scrub, you screen, you then use something called dense media separation, because diamond is a dense mineral, it has a density of 3.5. And then finally, to recover the diamond from the dense minerals, you use X-rays, because diamonds luminesce. Alternatively to crushing and scrubbing, and you would use autogenous milling, where you are using the harder rock to basically mill the softer rock to allow for the liberation of diamonds.
And how deep are diamonds normally in the ground?
Well, a lot depends. If your kimberlite is on the surface, and they typically are,
Okay.
your diamonds are actually on the surface. And because kimberlites are typically carrot-shaped, so the deeper you go, the smaller the diameter of the pipe would be, it becomes a question of economics in terms of your operating cost against your operating revenue.
So the majority of the world's diamonds are based in Africa, I guess. And I know that Russia is a big exporter as well, or they produce a lot of diamonds as well. You kind of mentioned why they're there, but how big do you think the industry is as a whole, and how much diamonds are left to be explored and mined?
Very well, a lot of very, very good questions. If I can address the first part,
Yeah.
there are three major diamond producing areas in the world. You've obviously got Africa, and I'd like to divide that into two, which is the Kaap-Vaal Craton, which is Botswana, South Africa, and Zimbabwe. You then move up to Central Africa, where the DRC and Angola are major producers of diamonds. Then you go across to Canada, in the Northwest Territories and elsewhere. That's a major producer. And the other major producer is in Russia, particularly Northeast Russia. Between those three areas, I would say between 80 and 90% of diamond production. Your question about where are you going to find new kimberlites? Because one can make a fair assumption that all the easy kimberlites and all the potentially commercial kimberlites have actually already been discovered. And so in my view, there are two or three things you actually need to look for. Firstly, you've got to look for, are there any changes in the geological model? Because we obviously use common wisdom in terms of looking for kimberlites from a geological perspective and a technical perspective. The second thing, and this is a really important thing, is whenever there's a breakthrough in technology, in our world, we assume the exploration clock starts ticking again. If I give one very small example, that would illustrate my point. In 1969, De Beers discovered what was the AK6 deposit, and it had a grade of 2.5 carats per 100 tons and a size of 2.5 hectares. Fast forward about 35 years, De Beers went back there again. That 2.5 hectares became 10, purely because of the advent of more modern ground geophysics. And the 2.5 carats per 100 tons became 25. And that was because drilling technology was a lot less destructive to the diamonds than it would have been 35 or so years ago. So whenever there is a breakthrough in technology, whether it's through drilling, geophysics, geochemistry, we go back and look at all the old areas all over again. Not just from an exploration perspective, but equally if they're more cost-effective ways of mining and processing, which means that mines which have closed a long time ago could now be economic based on lower operating costs and higher diamond revenues.
So you obviously have different grades of diamonds, right? Do you, within one area, would you have a certain grade for jewelry and then a certain grade for, say, machinery? Or do you just generally sell them to the market and the market decide which area the diamonds are going to go in?
I'll backtrack momentarily. The diamonds come from the kimberlites, and kimberlites tend to occur in clusters.
Okay.
So, for example, if I use the Orapa region of Botswana as an example, you have 60 kimberlites or thereabouts in that cluster. And kimberlites generally contained in cluster. Within those 60 kimberlites, 6 of them are diamond mines or have been diamond mines. But they all have very different assortments of diamonds. And what I mean by assortment is a general term which looks at color, clarity, size, relative abundance of gem compared to industrial, which all leads to a very different dollar per carat. And just remember, in that 60 clusters of kimberlites, 54 of them were non-commercial, many of which were barren indeed. So how do you arrive at that dollar per carat price, which is your other question? Is your dollar carat price is based on the cut of the gemstone itself, your clarity, your color, and your carats, what they call the 4 C's as such. And it's in response, if it's a jewelry piece, to what the market demand is all about.
Okay, so I was going to ask, really what drives, apart from, I guess, general principles of economics, which is supply versus demand, but with the diamond industry, I guess, could one say that maybe anybody can determine what the value of a diamond is because it depends on how much someone's willing to pay for it? I know that's for any commodity.
Well, the diamond industry has often been accused of being a lot more opaque than any other industry. If, for example, if you want to look up the gold price, you just go and look up at that in the newspaper, and you have the gold price. With diamonds, you have over 14,000 categories of rough stone, and those are often summarized in what they call the Rappaport price list, where you measure your price against that when you sell your rough diamond. The polished diamond is then a multiple from the Rappaport price list, and typically they would all be within a certain band, and the diamond price you would see in the shops would be generally at a certain specific percentage, either just below or above the Rappaport price list. So the pricing is it's not arbitrary at all.
Okay.
It's actually quite clear to actually those in the industry.
And I've heard you say before that it was the strongest sort of reviving commodity since the financial crisis as well.
That's absolutely right. And it's also been the least volatile since the global financial crisis. And I think that is a function of the supply-demand equation, in that most of the larger discoveries have been found to a large degree. Those larger discoveries are becoming more expensive to mine as they go deeper. There isn't the same appetite for diamond exploration within De Beers, which was the largest diamond explorer for many years. Equally, the London Stock Exchange was the greatest exchange to raise money for diamond exploration. And I think before the GFC, there must have been at least 20 companies listed on AIM and the main board. And I think today there's probably only 5. So there's a much greater degree of skepticism of diamond exploration. So what this means, people are not exploring as much, there's not enough money going in, so the regularity of discoveries is less. So if you combine that with a strong demand equation, because the people in the Middle East and the Far East have a desire, like we all do, I hope, to spend 4 months of their gross salary on a diamond engagement ring. It's like a rite of passage for your middle class, and the middle class are growing there. So the demand side is growing. And in economics, for the supply to meet the demand, it equates to real diamond price growth. And I think that's why you saw a strong rebound post the GFC, and that's why you see much less volatility in the diamond price than you do in any other commodity, although I hasten to add that diamond is not a commodity.
Okay, so and I referred to it as a commodity earlier, so if you could go 10 years into the future, what would be your predictions for the diamond market?
I think that the diamond market itself will be a dual-tier market. I think you'll still see a very, very strong natural section of that market, particularly for engagement rings and larger. But I'll also see a gradual increase in the percentage of that market of synthetic diamonds. Now, I'm not saying that's going to erode the natural diamond market at all. I see a growing of the market, and that's due to the growth of the middle class and the aspiration around diamond itself. And it's tagged to or twinned with the absence of new discoveries and new mines actually coming into production.
Would you argue that if synthetics production increased, that the real diamonds price would also increase? Because I guess it'd become more of a rarity and more maybe even, people aren't going to be buying the synthetics, or they might be buying the synthetics, but to have the real thing, it might be worth more.
I would certainly see it from that perspective, because as you're quite right, the natural diamond production, if one looks at all the forecast models, does begin to wane. People, when they have a very significant event in their life, like an engagement or a wedding, do want to buy a natural product. But equally, youngsters want to have something funky and fun, which is cheaper, which is a synthetic product. And if you look at any other industry in the precious stones or pearl industry, and maybe just look at pearls, for example, you have the Mikimoto pearls right at the top end, which are expensive. You have cultured in the middle, and you have synthetics at the bottom end. So it's horses for courses, what I believe.
So you're the managing director, as I mentioned at the beginning, of Botswana Diamonds. How is that company looking, and what is the industry in that particular area? What are you looking for in the future?
Now, we're focused very much on the Campbell Craton in
Okay.
Southern Africa, which is Botswana, Zimbabwe, and South Africa. Why we're in Botswana, I'll briefly touch on each country, is that it is what they call the Switzerland of Africa. It's very, very stable. The rule of law is very good. It is the best diamond address in the world. It's the largest diamond producer in the world. And it's got roughly 50 years or so of diamonds left within the De Beers Government of Botswana joint venture. And it has an abundance of kimberlites. So our job in Botswana, through joint ventures with two parties, Alrosa and BCL, are to discover those kimberlites, which are sometimes deeply buried beneath sand, and then bring them to account. South Africa is slightly different. South Africa also has a very long heritage of diamond mining, going all the way back to the turn of the last century and before that, in fact. But very little new technology has been used in South Africa to look for diamond deposits. And if I go back to my earlier point, is one of the only ways in which you're going to find a new commercial deposit is by using new technology. Mm-hmm. That's exactly what we do. So we've teamed up with a group called Vatomi, and we're the most active diamond explorer in South Africa, with a number of projects in 3 different provinces where we're looking to put together new technology and realize commerciality through that. And then finally, in Zimbabwe, we announced an MOU with Vast Resources, and that has probably even less application of modern technology than South Africa. Mm-hmm. So as all are on the Campbell Craton, we believe all are equally prospective, but each of them has their own fiscal climate and political risk attached to it.
Yeah, so on political risk, obviously you kind of got to be careful what you say, but I guess you're not in the most stable area. Let's put it that way. How do you really, I know you're laughing at me now, but how do you really think that politics will affect the industry?
Politics is a vital component of the industry, Will. And one of the things I'm currently doing is I'm writing a short paper about the discovery of a particular kimberlite with certain economics and putting it into Botswana, South Africa, and Zimbabwe to see what the eventual return would be to your shareholder. Because that's actually what it's all about at the end of the day. My chairman has got a lovely saying which says, "A dollar is an orphan. It doesn't have a home, it'll find its actually best return." So yes, we do operate in jurisdictions which have higher political risk, but after all, we are a junior. And we take very calculated decisions in terms of where we go, but our risk envelope, both from a technical and a prospectivity and a political perspective, would be higher than an Anglo-American or a De Beers or somewhere. Just to give you a case in point, that we started our very active diamond exploration program in South Africa at the beginning of last year. Towards the end of last year, De Beers announced its return to South Africa as a diamond explorer. But what gives me huge encouragement from a political perspective is that in the past couple of months, I personally have had dialogues with the Minister of Mines in Botswana and the Deputy Minister of Mines in South Africa about reinvigorating the exploration environment in both countries. And I feel enormously privileged to do that, representing Botswana Diamonds, which is a very, very small and, in the larger scheme of things, insignificant, where they would listen to me in terms of how can we encourage investors, which chiefly come from London and Ireland, in my particular case, to put more money into those particular countries, and how, as importantly, we can try and find investors within those countries to actually put their money to developing exploration in their country.
I guess a key question is, and you're probably going to say the answer is yes, it is a great investment, but explain to me why somebody should invest in the diamond, especially, I guess, in the Botswana diamond market.
Investing in an exploration company is not for widows and orphans. Let me say that absolutely right up front. So if you're looking for a steady dividend yield or perhaps a positive growth in your share price, Botswana Diamonds is the wrong kind of company for you. However, if you're looking for something which could potentially run at a multiple of your share price, and if I give an example of the last company I ran with my chairman, Dr. Teeling, African Diamonds, we gave our original shareholders a 25 times return on their share price. Now, I'm not saying the same is going to happen with Botswana Diamonds, but if you have a discretionary part of your portfolio and you want to make those kind of multiples, you can probably only get it in terms of companies such as Botswana Diamonds. And why Botswana Diamonds? When you look at exploration, there are a few fundamental things you've got to look at. Like property, you've got to be in the right place. Mm-hmm. The Campbell Craton is probably one of the most prolific producers of diamonds in the world. Secondly, you need to have a team which has got a track record of doing this before. We've got a track record doing this before. It goes back actually many, many decades. And thirdly, and without this, none of this will come to part. You've got to have the money to do the job. And we're very fortunate that our chairman, Dr. Teeling, has a following in Dublin who've been founding shareholders in these kind of initiatives. And we have a following in London, which is great.
Do you find that lots of people are employed within the local communities as well?
Well, in my last company, I ran a company called Rockwell Diamonds, which had 3 alluvial diamond mines in the Northern Cape. And we employed just under 1,000 people.
Oh, wow.
And I think all but maybe 10 of those people came from the region itself. I would count myself as one of the only part of the other 10. And I think I'm a British citizen, although I'm a South African permanent resident. I would probably be the only person with a non-South African passport.
So you could really say that it is helping the local communities as well.
Well, I'm very passionate about that as well. You've got to not only provide a return for your shareholders, that's absolutely fundamental, because they're the people who put the risk capital in to begin with, but you've got to do something to grow the local community, and that's first and foremost by growing local talent.
And what is theft ever an issue? You would think with a substance that could be so expensive, is theft a big issue for you?
Well, it's an absolutely fundamental issue. Yes, it is. And typically on our exploration operations, and certainly in your mining operations, the whole process beyond concentration is monitored using cameras, very strong access control, and there are a raft of other measures which I don't really want to go into detail on public on, because it's a bit like computer piracy. You've got to try and remain one step ahead, because just imagine you're an average employee earning an average salary, and you come across a beautiful yellow 10-carat stone, which is probably worth 10 or more years of your salary, perhaps maybe a lifetime salary. Mm-hmm. There is such strong temptation that you've got to do your very best to kind of remove that temptation by making sure that employees never touch the diamonds. So it's actually completely hands off. They know they are monitored actually all the time. And also importantly that all the kind of what I would call the HR or the softer issues are taken into account, so the person feels less likely to be tempted to steal a diamond.
And the sanctions, are they quite high as well?
Well, it's obviously instant dismissal and criminal charges.
So I guess as a final point, I know that we briefly touched on, say, the synthetic market of diamonds, but do you strongly believe that the core diamond production market, there will always be a demand and a supply for it?
Well, I'm obviously not going to be completely objective on that, being a diamond man through and through. But I go back to, why do you buy a diamond? You buy a diamond as a celebration of love, a celebration of a particular event in your life with a loved one. Why would you want to do that with a synthetic? And
Yeah.
that's why I firmly believe there will always be a very strong market in natural diamonds.
Well, I think on that note, that's a great way to end. So thank you very much for educating us all, and it's mind blowing actually. So thank you very much, James.
Thank you very much indeed, Will. Thank you.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more.